here's in Spectra Energy. The VantagePoint software, it's actually using a type of artificial intelligence. It's called neural networks to perform intermarket analysis. What I've done here is I've gone into the properties for Spectra Energy, and we can actually view the 25 to 30 intermarkets is what they're called. And these are the most closely related markets that are known to affect and drive Spectra here. And you see here that we've got energy sector spider, the Hong Kong index, global energy sector index, Qs, the S&P 500, the Japanese yen, the dollar index, crude oil, natural gas. It's a very important market for this this stock here. Gold, treasuries. I mean, this is the type of analysis that most traders simply don't do and end up relying on information that's honestly a little outdated and very simplistic, overly simplistic. Now, what I want to do is explain everything on the chart here and really explain, okay, what that technology does. So what that type of artificial intelligence, what it's doing, is it's analyzing all those relationships, incorporating not only the past price data of this market, but also those 25 correlated markets. And then what it's doing is actually producing predictive indicators that actually predict where essentially these values of price are moving. Now, what I want to do is I'm actually going to bring up a cursor here and explain everything on the chart so you can really understand this. Now, if you look at the black line on your chart there, now that black line, that is a regular simple moving average, okay? If you guys are familiar with a simple moving average, or if you've used one in the past, type yes into the question box. Most of you, even the beginners, I'm sure, have used a simple moving average. And all that does is it takes the last however many closed prices, in this case 10 closed prices, averages them together, and then plots that value moving forward. So it's just going to drop off the 11th day, keep plotting that line, essentially averaging those last 10 closed prices together. Now, if you've used a moving average, which I see I got well over a dozen yeses here, you probably know what I'm going to say next, right? The problem with that indicator is it's a lagging indicator. It only reacts to what market movements have already happened. It has no information of other markets. It's only looking at the one market in isolation that you're trading. So this is what a lot of traders end up relying on, are essentially these lagging tools that are always just going to react to where market prices have already been. Now, this blue line that you see on the chart there, the blue line there, that is VantagePoint's proprietary predicted moving average. So for that value to be plotted, we're analyzing and weighing those 25 market relationships and then plotting that value forward. It's actually looking ahead 1 to 3 trading days, letting you know where that regular moving average is expected to go. So if we're able to predict where the moving average is expected to move with a very high level of accuracy, and we're essentially looking out forward into time, that's going to give us a very early indication of overall trend direction. But what we spoke about earlier is really talking about these consolidations. And so this is why this is so critical, is we not only want to identify that there's been a trend change, which we can identify whenever we get that blue line crossing above or below the black line. And we actually have a feature here which will scan for all these fresh crossovers. So you're going to be able to see these fresh opportunities right as they come through. But what we want to do is really identify those trend changes so that we can get in early on that directional shift. But because those intermarket relationships are always, looking at all those interrelated markets and constantly going to plot forward and really let you know, look, is the overall direction still higher? As long as that blue line remains above the black line, you want to go ahead and hold out on your position. And you see what happens is a lot of traders are using these really reactive indicators that essentially just track price and aren't going to be able to differentiate between those intermarket relationships and keep you positioned on the right side of the market during those periods of consolidation. That's when these tools are really going to break down, not letting you know, hey, should I go ahead and hold on to my position, or has an actual trend reversal happened? Should I go ahead and adjust my position? So this is a predicted moving average. As long as it remains above the blue line, we want to be long. Below the black line, we want to be short, and we want to pay attention, though, to these crossovers in the software. Now, additionally, though, you're going to notice that there's a green line at the very bottom of the chart here, right? So we have this green indicator. It has a 1 here and a 0. Now, let me go ahead and explain this too, because as we go through some of these charts, it's going to be very, very important. And as a trader, this is what allows you to be really adaptive. So when those market conditions are changing, remember, you can get into a market 2 weeks ago But when it's time to go ahead and trade the reversal or go ahead and take your profits and get out of a position, you're going to have to react and adapt. And so that's what's great about these tools is they're moving forward through time, helping you really adapt to these changing market conditions so that, like I said, you'll have the patience to hold out for that consolidation, but then also trade the reversal when it comes. Now, this neural index here, it can only be a value of a 1 or a 0. You see P index, and it's looking out 2 trading days. So looking out 48 hours ahead and indicating short-term strength or weakness in the market. Now, we want to use this in combination with our overall direction so that when we know, hey, we've gotten a crossover to the upside, if we have confirmation that over the next 48 hours we should see these short-term average prices move higher, well, that's essentially that double confirmation there, and that's really what we're looking for at the beginning of these trends. But what we notice is, these blue and the black lines pinch very, very close together here. You see just not a lot of separation, but not a crossover at all. So even when we get this big decline in the market, let me go ahead and clear that out. Even when we get this big decline in the market, you do not have a crossover there. The software is still saying, look, the direction is up. Take long positions, hold on to your positions until you clearly see that crossover to the downside. And you see once all these indications get together, so that blue and black lines start to separate, so the prediction gets further away from the actual, and you have that short-term strength, that's when we really see these nice rallies in the market. And so this is how, regardless of your trading style, I really don't care if you trade options, if you're a day trader, but you need to make sure that those buy, sell, hold decisions are made in a consistent way. And the way that we really do that is, again, utilizing this technology to analyze those global market relationships like natural gas prices, like other energy companies, like the energy ETFs, where so much of the trading nowadays is happening. So this is what is really killing a lot of traders out there in the market, is they simply don't have the tools to make these determinations with a very high level of accuracy consistently. And so their overall trading decisions really come down to a lot of discretion, things they maybe hear on the television, and not really science and mathematics and tools that have been tested over the long haul. So another opportunity here I want to take a look at, another good example of where so many traders get tripped up here and miss out on the best parts of trading opportunities, really the best moves in the market. Here's just a great example of why this is so effective. We've gotten a crossover in the software, right? Again, very, very simple of what we're looking for. So crossover, blue line over black line, so the predicted moving average has moved above the actual moving average. Neural index is up at a 1 here, right? So you've gotten that confirmation saying, here's where you want to be paying attention to the market. Here's where there's opportunity. But we see that, trades, they don't go straight up. I mean, this is the problem with markets, right? It'd be great if all the trades that we identified either went straight up, and so we knew they were successful, and the minute they went down, we knew they weren't successful. That'd make it very simple to trade, because we could get out of trades so early, we wouldn't have to have any patience, and trading would be the simplest thing in the world. But that's not really how it works. So, these intermarket relationships are able to pick up on this directional change. We know, look, you want to be positioned to the long side, but you see we do get some short-term weakness in the market. And the neural index does its job there. It's saying, look, over the next 48 hours, expect that short-term weakness in the market. Expect that short-term weakness, expect that short-term weakness. Well, when you expect that short-term weakness and I'm not getting out of this trade until that blue line crosses below the black line, well, this is where that first example of where so many traders get lost here. They get into a market like this, they feel like they've gotten a really great entry, but over that 3, 4, 5 trading days, the market starts slipping against them, right? And they end up tightening up their stops, getting stopped out at break even, or they end up taking a small loss because intraday they're sitting there watching the market, not really looking at the bigger picture, have tools to analyze the bigger picture. And so they go ahead, they sell their position, get out of the market, maybe take a small loss or break even, and then miss out on this. So miss out on a move from $26, $27 a share all the way up to $30 and still moving higher. And you see how accurate the neural index is over this time period here. So if you're a day trader, if you trade short term or if you trade weekly options or anything like that, guys, you got to understand that if you have the tools that are consistently and accurately picking out what is the trend direction, should I be long, should I be short, and then with an extremely high level of accuracy letting you know over the next 48 hours, should you be a buyer or should you be a seller in the market, that's going to make a huge difference in your trading. But the reality here, guys, is that the only way this is possible, the only way that we can forecast with this high level of accuracy is by utilizing that technology of neural networks. There's simply so much data that needs to be analyzed to make these determinations. I mean, General Growth Properties here, we're talking about a financial company, right? Well, think about interest rates. Think about the dollar index. Think about the XLF, the financial ETF spider. All of these markets are trading. All of these markets have a huge effect on where this one individual market is headed next. And so many traders, they just lose sight of this, lose sight of, okay, what should I be focusing on to actually give myself a statistical edge in the markets? And so that's where these tools can really, really help you and determine that, hey, I need to just go ahead and hold out on my position so I can make sure that I capture the actual move to the upside. So just in this example here, we can see crossover to the upside here. Market moved up. We're still going higher here, but 26 trading days, market up about 12.5%, or about $3.30 per share. So I mean, easily $1,000 or 1,000 shares purchased there, about $3,300 on your last trade, about 26 trading days. So you've got to have the tools that are able to help you identify and hold out for these longer term moves. It's where some of the best profits are, is in these nice trends. So a couple more examples here. Google, we looked over that chart as well. Again, regardless of whether you trade large cap stocks, small cap, I mean, you have to be able to determine these things quite clearly. And you see Google, just over the past couple of weeks here, we got a really pretty significant decline here. You certainly didn't want to be holding a lot of shares. So a move higher, but you get that quick, clear confirmation that, look, this market trend has reversed, right? Blue line below the black line. Didn't want to be getting long here, right? But you see the blue line is still below the black line. Neural Index confirmed that move to the downside. So the only option here is go ahead, short the market, buy some puts. You're definitely not going long the market, but imagine how many people are tripped up over this sort of sideways period here, where it says, okay, yeah, we might trade out of this, but this is very clearly defined from the VantagePoint software saying, look, go ahead, you want to be a short in this market. Until recently, things have turned around and we've seen a lot more bullishness, not just in Google, but a lot of these other stocks. There's some really great opportunities in the market, but you have to be positioned in these things, again, before the volatility comes into the market, or else there's simply no way you can catch these moves, and you're just going to end up chasing them for a really, really long part of your trading career. A couple more examples here, and I had a couple questions. I saw people asking about other markets, so we have a good example, for the Forex market. We forecast for commodities and all these markets as well, but this is just perfect, and this is exactly why I wanted, to demonstrate these things, because, you never know when these really great opportunities are going to break out in the market, but you have to be able to adapt to them, and you have to be able to remain patient during those times of volatility. So you see that, the forecast from the software came through all the way back here in April. You see our blue line and our black line began to separate, Neural Index up at a 1. But this is the most critical time in the market, guys, right here. And this is where so many traders lose it. And this is why, making that determination between, hey, is this a consolidation or is the reversal? Should I go ahead and adjust my position? Well, the market over that period of time, it actually moved up, so a really nice move higher. So, if you got into the market, you probably made some money over that time period, at least, from this trading day here at the end of April. But then the market moves lower, 17.25%. So that's what it's retracing to. It moves up and then back down 17.25%. So how many of you can imagine being in a position like that? Maybe you got filled around 420, 440. Market moves all the way up to $5. You made a ton of money and you're feeling great. But then what starts to happen? It gives back a substantial portion of those gains over the next couple days and then actually starts trading lower. So a lot of traders, what do? They either end up taking tiny, tiny, tiny gains. I mean, pathetic gains. Just, making 10 cents when they should be making $4 or $5. So they end up taking a tiny gain, maybe even end up getting, slipped out. Maybe there's a gap and they end up actually taking a loss on the trade. And then what do they end up missing out on? And I know you guys have experienced this in the market. I heard some guys earlier, and that's all right. We know people experience this, but you can't miss out on the 91% move that's coming after that. After that 17% retracement, if you don't have the tools that are clearly going to say, look, the overall direction, guys, still to the upside, not even close to a crossover there. You see the Neural Index actually strong over that time period, saying, look, hold on to this position over the short term, over the long term, look to go ahead and get ready to take long positions, and that's what allows you to be in that position to capture that 91% move directly after a 17% decline. And so, you've got to have the tools, the approach, and the technology to trade these longer term windows, or else you're just not going to have the confidence to hold out on those positions, and these consolidations will absolutely kill you. And certainly when you get into a position, it starts to consolidate and the trend actually reverses and you haven't identified it clearly, well, that's catastrophic for your trading account, and that you simply can't have. So that's how these tools can really protect you, but more importantly, have you positioned appropriately to decrease your downside, but vastly increase the upside. I mean, we see here on this pharmaceutical company here, and I'm actually going to scan through some of these stocks and show you how the scanning feature works to identify these opportunities early. But this trade here, guys, 104% move over the last 67 trading days. So we're literally talking 3 months of time. 3 months of time, 100% gain. So if you're not capturing moves like that, if you're not capturing these nice big swings in the market, if you don't have the confidence to not only take a position, but then add to your position when it's moving, when it's moving in your direction, you got to go ahead and really think about, okay, why do I make decisions? How do I adapt to the changing market conditions? And why should I even have an edge in the markets? Why should I be making money? Well, if you answer those questions, you'll realize why VantagePoint will really help you out in really all these areas. Here's the dollar, US dollar, Japanese yen here. I had a couple guys asking about Forex pairs and other markets. We do forecasts for so many different markets, and that's so critical too, guys, is that this technology and this approach of analyzing these intermarket relationships and then forecasting short-term prices to the upside or the downside, you can apply this to any market. So commodities, there's over 30 Forex pairs, over 64 commodities, as well as U.S. stocks, ETFs, Canadian, India stocks. And so when you're able to apply this to so many markets, you can trade every market really the same way and really understand what is your game plan going in. But you see here, US dollar yen, there was a really nice rally up to 110. If you trade in the currencies, you remember this, market moving higher up to 110 in US dollar yen. But here's our clearly defined trend reversal. Blue line clearly below black line, neural index down at a 0, and that's what's going to come through these scans for you guys. So I'm going to show you actually how we scan through all these markets. It literally takes you about 10 to 30 minutes depending on how many markets you might be trading, but how literally in just a very short period of time you're going to be able to recognize these trend changes and then understand, hey, how should I trade this market moving forward? So we see here in dollar yen, since that crossover, so you see it move to the upside, crossover to the downside, this market's moved down quite a bit here. So just on a standard lot, you're looking at about $8,000 to the downside there on a standard lot, standard contract. So this is why these profits can add up so quickly when you're doing things with a really structured approach, when you have a process in place that's going to help you understand, hey, now's the time when I should be getting into the market, but should I be holding the market? Should I be holding through these periods of consolidation because the trend is still in my favor? So I mentioned the scanning feature, and this is really great. This is one of my favorite parts of the software. I trade all markets. I probably spend 20 minutes in the evening looking through the futures and the Forex, and then maybe 30 minutes in the morning before the U.S. equity market's just scanning through literally hundreds of stocks in a short period of time here. But let me show you how this works because it's very, very simple. So I'll go ahead and I'm going to open up this portfolio for healthcare stocks, so all these individual healthcare companies. And what you're going to notice is that all the sectors are split up this way. So, the sector, inside of each sector are all the individual shares and individual companies that you can go ahead and trade. So the technology here has been able to be applied to all these individual markets, so that in this example you see Allergan here, it has its unique set of intermarkets. It's not just looking at, a few 5 or 6 different markets and it's all the same markets of all the other healthcare companies. That technology has been able to identify those significant market relationships that have strong, whether they be, positive correlations, whether they be inverse correlations. Some markets have leads to other markets, some markets have lags. These things change over time, and that's actually what the technology of neural networks is so good at doing, is identifying these relationships and learning the behavior. I mean, it's a really intelligent learning machine, essentially. Now, Here we have Allergan, but let me go ahead. I want to focus on the scanning feature. Now, we've literally got over 100 stocks in this portfolio, so a lot of markets you can scan through, but I want to show you how quick this is and how easy. Now, from those previous examples there of explaining the predicted moving average, also explaining that neural index, you see that very simple, just 2 indicators here, and that's really the key, is when you have something that is consistent and accurate, you don't need to have 5, 6, 7 different indicators. But you can go ahead and set whatever the criteria that you want for your trading. So, what I explained was, these crossovers. We want our crossover condition from these tools met. We also want to make sure that this to the upside if we're looking for long positions, right? So we can set the crossover criteria to a 1, so a fresh crossover. We can make sure that it's up, so that those are positions only to the upside, right? And then simply, we want to get our confirmation from our neural index, so our short-term forecaster at the bottom there. We want to make sure that that's in agreement with what we're seeing here. Well, guys, look how quickly we've gone through 107 markets. We're already scanned down to 9 opportunities that are actually showing a fresh crossover and showing these conditions. And so we can then look and find, where do we want to look for opportunities in the market? And so this is why this is so helpful to cut down the amount of time you're spending doing your analysis, because how many traders are out there spending hours and hours and hours looking at their charts in the evenings, or during the market when the market's open they're sitting in front of these live charts all day, wasting away, getting fat. It's totally unnecessary. What you need to have is a process, an approach, but an approach that's actually backed by technology and science and mathematics. So this is what's going to give you a huge edge, and so that you can cut down on the time that you're using. Quickly identify these opportunities. You see in just about 3-4 minutes we were able to scan through hundreds of stocks, found a couple opportunities here, and you can select, hey, where do I want to focus my capital, where do I want to pay attention, and it's going to get you better results with less time. So, so many traders, I hear this all the time, spending so much time in front of their computers and still not seeing the results, still not making a profit. That's losing money. If you're breaking even and spending an hour a day, you are losing money, losing time, and having less time to do what you should want to do with your life. Spend time with your family and exercise and live a more balanced, healthy existence here.